Welcome back to the Longacres Finance channel. With April almost over, it's time to take a look at the best Dividend Aristocrats for the month of May. Dividend Aristocrats have not fared well this year, like most of the stock market. However, NOBL is flat in April through Monday the 25th, and has a loss on the year of 2.98%, whereas SPY, the S&P 500 ETF, is down 5.12% in April and 9.49% on the year. So thus far, Dividend Aristocrats have been a harbor of safety for conservative dividend investors in a turbulent year. I came up with 3 simple strategies for selecting a small subset of Dividend Aristocrats every month that should lead to better than average results. All 3 strategies make sense in theory, and thus far they are all performing better than NOBL. There are no guarantees in the stock market, and picking individual stocks can be a riskier option versus investing in index funds. But sometimes taking a little more risk can lead to better than average results. So let me explain how each strategy works, show you how they have performed thus far, and tell you which aristocrats are chosen for May. Strategy number 1 is the most undervalued strategy. Investing in stocks that are trading for bargain prices makes sense. The hard part is figuring out what a bargain price is. I like to use dividend yield theory to value dividend aristocrats. It's a fairly simple valuation technique that is best suited for stable companies with long dividend histories. This is why applying it to the dividend aristocrat makes a lot of sense. All you need to do is compare the current dividend yield to the long-term trailing dividend yield for each dividend aristocrat. If the current dividend yield is higher than the trailing dividend yield, a stock is potentially undervalued, and vice versa. This strategy has beaten NOBL for only 4 out of the last 8 months, but overall it has a return that is twice as good as NOBL's. The most undervalued strategy is up 6.97% since August of 2021, while NOBL has returned 3.39% during this period of time. That is 3.58% of alpha generated by this strategy. And in April thus far, the strategy is returning 1.05% versus a 0.02% loss for NOBL. So if the current trend holds out for the last trading week of the month, the alpha generated by this strategy will increase. The main drivers of strong performance in April are Kimberly-Clark, that is up 17.44% through April 25th, and Clorox, that is up 9.54% on the month. Not all of the 10 most undervalued aristocrats from April are performing well this month. T. Rowe Price Group is the worst performer with a loss of 9.26%. But this strategy performs better with the collective results of the 10 chosen aristocrats. An even better application of this strategy is to build a buy and hold portfolio, where you invest in the 10 most undervalued aristocrats each month and never sell these positions. The buy and hold strategy has a return of 11.71% between April 2021 and March 2022. This is 8.32% better than the return offered by NOBL of 3.39%. The buy and hold strategy offers 2 positive aspects over moving in and out of the most undervalued aristocrats on a monthly basis. First, you lock in a historically attractive dividend yield for the chosen aristocrats each month. And second, you benefit in the long term as aristocrats return to fair valuation. This can sometimes take a few months or even years, but you get to collect above average dividends while you wait. The buy and hold portfolio started in August of 2021 has 23 unique aristocrats in it. The best performing picks thus far have been Chevron with a 67.3% return, AbbVie with a 53.67% return, and Exxon with a 52.3% return. The worst performing position in the buy and hold portfolio is Clorox with a 15.36% loss. Leggett & Platt is not far behind with a loss of 14.46%. And VF Corporation rounds out the worst 3 positions with a loss of 13.84%. Here are the 10 most undervalued dividend aristocrats right now that will be added to the portfolio in May. A.O. Smith, Franklin Resources, Clorox, Ecolab, 3M, PPG Industries, Stanley Black & Decker, T. Rowe Price Group, VF Corporation, and Walgreens. Collectively, they offer a 3.07% dividend yield. That is better than the 2.25% dividend yield for all 64 dividend aristocrats. That's right, there are only 64 dividend aristocrats to choose from today. We started the year with 66, but Leggett & Platt has been dropped from the index because the stock fell out of the S&P 500 index. And more recently, People's United was acquired by MT Bank, and since the stock no longer exists, it disappears from the dividend aristocrat list. Okay, let's move on to strategy number 2, which focuses on the fastest expected growth. Here, instead of looking at the valuation alone, I am focused on where these companies are headed in the near future. To be more precise, I compute a forecasted 5-year annualized rate of return for each aristocrat, and I select the 10 aristocrats with the highest forecasts. The forecast is quite simple. It adds the current dividend yield, a return to fair value in 5 years, and a discounted earnings growth estimate. This is certainly not an exact science, but it's a quick estimate of a potential future return we can expect from each aristocrat. This strategy has beaten NOBL for 6 out of the last 8 months, with a total return of 9.24% since August of 2021. The strategy is 5.85% ahead of NOBL's 3.39% return during this 8-month period. Through April 25th, it is also performing pretty well, with a 0.71% return, compared to a 0.02% loss for NOBL. If this trend holds out during the last week of April, we will likely see the alpha generated from strategy 2 increase. 3 of the 10 chosen aristocrats for this strategy in April are driving their return for the month. IBM is up 6.98% through April 25th, Nucor is up 6.67%, and Cisco is up 10.48%. The only poorly performing chosen stock is T. Rowe Price Group with a loss of 9.26%. The buy and hold portfolio for Strategy 2 is also performing better than the aristocrats chosen each month. It has a return of 10.54% between August 2021 and March 2022. That is 7.15% better than NOBL. This buy and hold portfolio is performing slightly worse than the most undervalued strategy, but still has very respectable results. The buy and hold portfolio is made up of 19 unique aristocrats, so it's a little smaller than the most undervalued portfolio. The best performing positions are Nucor with a gain of 36.36%, People's United with a gain of 27.02%, and Chubb with a gain of 15.76%. The worst performing positions are Stanley Black & Decker with a loss of 19.5%, VF Corporation with a loss of 14.41%, and Ecolab with a loss of 12.6%. Since People's United stock no longer exists, it will be removed from the buy and hold portfolio, and the proceeds will be allocated equally amongst the 10 chosen aristocrats for April. Let's take a quick look at the 10 aristocrats poised for the fastest future growth for May. We have Caterpillar, Chubb, Ecolab, IBM, 3M, PPG Industries, Stanley Black & Decker, Cisco, T. Rowe Price Group, and VF Corporation. So just one change from the prior month, Caterpillar replaces Nucor on the list. Collectively, the chosen aristocrats offer a 2.76% dividend yield. That is more attractive than the average dividend yield offered by all of the dividend aristocrats of 2.25%. But remember, the main objective for this strategy is to achieve the best long-term total return. Okay, let's move on to the third strategy, that is a blend of the first two. Here I combine the best of both. I look for the 10 aristocrats poised for the highest future return, but only amongst the potentially undervalued aristocrats. Initially, I expected this strategy to perform the best, and it may yet meet this expectation, but thus far it is not doing better than the prior two strategies. Through March 2022, the strategy has a return of 7.92%, that is 4.54% better than NOBL, so it is beating the most undervalued strategy, but not the fastest expected growth strategy. In April thus far, the 10 chosen aristocrats are up 0.87%, compared to a 0.2% loss for NOBL. So another good month if this trend can hold out during the final week. The best chosen aristocrats in April are Kimberly-Clark with a 17.44% gain through April 25th, and IBM with a 6.98% gain. This strategy also chose T. Rowe Price Group, that is the worst performer with a loss of 9.26%. The buy and hold strategy has a return of 9.69% through month-end March, that is 6.3% better than NOBL. This is a good amount of alpha generated over the benchmark, but the other two buy and hold portfolios are performing a little better thus far. The blended buy and hold portfolio is made up of 23 unique aristocrats, with the best performers thus far being Exxon with a 52.3% gain, People's United with a 27.02% gain, and Atmos Energy with a 26.82% gain. The worst positions are Stanley Black & Decker with a loss of 16.59%, VF Corporation with a loss of 13.94%, and 3M with a loss of 13.75%. Here are the 10 chosen aristocrats for this strategy in May. Air Products and Chemicals, Ecolab, IBM, Illinois Toolworks, Medtronic, 3M, PPG Industries, Stanley Black & Decker, T. Rowe Price Group, and VF Corporation. So we have two changes from April. Kimberly-Clark and Sherwin-Williams drop off and are replaced by Air Products and Chemicals and Illinois Toolworks. Collectively, these 10 aristocrats offer a 2.91% dividend yield. That is pretty attractive in comparison to the 2.25% dividend yield offered by all of the aristocrats. That's about it for today. Let me know if you guys would like to see any other details about these strategies, or maybe a more detailed review of the buy and hold portfolios. If you enjoyed the video, please give it a like and subscribe to the channel. See you next time.